But when it is there, it has a very high success rate. There are three major indices, right? The NASDAQ, the Dow, the S&P. And clearly, the NASDAQ's going to be the most volatile. The S&P will be the second most volatile, and the Dow will be the third most volatile.
Okay.
Highest beta, if you want to call it that, or volatile. So if the market's going up, in my view, then the most volatile assets should be going up the most. So if you're having an up day, the NASDAQ should be up the most. The S&P should be up the second most, and the Dow should be up the third most. NASDAQ up 1%, S&P up 0.75%, Dow up 0.5%. That's an up day. That's what an up day should look like. And a down day, the opposite. I mean, it's just simple math, right? So you can trade that as a trend. Okay, this is a trend up day. NASDAQ's up the most, so I want to be long today because that's what the trend day is telling me. Or if you want to be short, okay, there's a trend down day, so I want to trade it from the short side. And you have to figure out where you're going to enter it and all that, right?
Yeah.
Which is a time thing, which I can get into, but that's the general idea. Where it gets really interesting is on reversal days, right? Where you'll have probably a piece of bad news or something like that. Hey, NVIDIA earnings come out bad or something like that. Not that that's ever happened, but it could one day.
Yeah.
Something happens bad. And then NASDAQ is leading the market down, as it should. And then maybe halfway through the day, suddenly the Dow makes a new low.
Okay.
And the S&P doesn't really make a new low. And the NASDAQ doesn't even come close to making a new low. So it's switching, right? Suddenly the stuff that's supposed to be more volatile is down less than the stuff that's supposed to be less. That's when you see the market reverse. And that becomes very interesting because you can start buying that weakness in the market and you can catch the turn the other way. Those are my favorite trades, but you can do it as a trend thing too,
Yeah.
And this works, I can tell you, a lot. Like everything else, not every day. So therefore you have to define your risk because there will be days where it doesn't work. And it's going to take discipline because you're going to really want to read this with an unbiased mind, not be like, well, it's kind of leading and it's kind of lagging. You know what I mean? Those days are like, if you have to say kind of, don't trade it because it's not there, right?
Yeah.